Harmony Gold reported a turnaround in first quarter earnings as it cashed in on rand gold prices hovering at quarterly highs. South Africa's third largest bullion producer seeing headline earnings per share come in at 123 cents, and that from a loss of 15 cents per share in the previous quarter. Graham Briggs, CEO of Harmony Gold, joins us now for more on the numbers. Graham, thanks so much for joining us today. Well, a good day for you to be joining us. Of course, a lot of euphoria over in the US, and certainly the re-election of Obama into the seat of president at the US having an impact on the gold price specifically. It's something that's held good favor for you through this earnings season.
Yeah, I guess the things that will affect us are the gold price, the dollar, and the rand, ultimately. I mean, those are big effects on our bottom line.
Absolutely. Take us through this period that was. We're looking at the July to September period, and as I said right at the top, a turnaround coming through from a loss to a profit position.
Yeah, Alishia, in the previous quarter was not a bad quarter. If you look at the operating line, operating profit at sort of 1.2 billion last quarter, this one we're reporting 1.5 something. So, you know, if you take out the taxes and deferred taxes and those sort of things, clean it up, and you'll see that, you know, last quarter was free cash. This quarter is free cash. We've turned the net debt figure into net cash. And this quarter we paid a dividend on top of it. So, you know, it was a good quarterly results. Production was good. Gold production was better. Tons were better. Grade was better. But last quarter was not a shabby quarter, you know. So if you look at the bottom line, headline shares, sure, headline earnings, you see that number. But there's a lot of below the line figures there.
Graham, some good news stories there. I mean, the rand is out of your control, of course, but it's worked in your favour, and it does seem to me that it's in a new trading band of sort of 855 up to 880, 885, something like that, which is very good long term. The gold price also out of your control, but has come back, but sort of starting to stabilise in the low 1700s. The one thing that might be in your control to a certain extent is labour relations. You seem to have come out relatively unscathed compared to some of your peers. Is that accidental, or have you got some secret?
Lindsay, I'd hope we've got some secrets, and I guess what it comes down to is really talking to people, engaging with them, collapsing the hierarchy, really getting into dealing with the issues on the ground. I guess, you know, our guys have done a lot of hard work. The general managers, HR managers have really come to the fore in this time. One of the big issues out there is that, you know, all the old rules and the rule book doesn't necessarily apply. That recipe that we've been using for the last 30 years in South Africa, there's some new rules, and of course we're busy rewriting them. So it's engaging with basically everybody and anybody who wants to be heard, and using a lot more facts. You know, don't use one blog as a fact. You know, get some facts behind the issues.
It's a lot hard, you know, it's a lot of hard work preempting these things, though. And with, you know, your presence in South Africa, specifically with 90% of your output coming through from the country, Graham, is this something that you are looking at reworking moving forward in light of all of these tensions that have escalated over the past few months?
Yeah, I guess, you know, it depends who you're talking to and what happens. But I mean, basically what we are saying in Harmony is that we like operating in South Africa. A lot of operations here in South Africa, or the bulk of our operations, and we like working. We understand the South African environment, and we can make it very successful. We spent many years restructuring the organisation, getting it into the States, and you know, there have been a lot of supporters for us doing that. So, you know, we're not running overseas. Sure, one needs to try and diversify, take a few eggs out of the big basket and spread them around, but those need to be in addition to what we have in South Africa. So we by no means are saying that, you know, South Africa is a basket case from our perspective. We think that there's a lot more engagement that can do, and we can make it very successful. We have to open our minds, as I say, and really look at a different way of engaging with people.
Graham, that's a very progressive stance towards the South African gold mining industry, and I applaud you for that. But on the other hand, you have got Papua New Guinea, and there also must be a temptation sometimes when you're generating so much cash to say, well, we should employ that somewhere. First question, how are the overseas operations going? Second question, if you would, are there any assets out there that can be snapped up at reasonable prices?
Yeah, in Papua New Guinea, a lot of the things that we're doing is really spending money. Wafi Golpu, it's spending money on exploration and, the early works in that project. Hidden Valley is not quite performing where it should be. There's some capital going into that on the crusher, and that will change Hidden Valley around quite a lot. So there's quite a bit of work going on, but it's really I think 4% or so, maybe 5% of our production coming out of PNG. If you look around the world, and sure, we've got a few sort of new business people, corporate development type of people, and look around the world, there's not much exciting out there that we're that interested in. Obviously you'd like to get it at a good price, and everyone looks at the gold price and say it's great, and wants a high price for the asset, which is not necessarily as good as what we've got. We've got some great assets here in South Africa and also in Papua New Guinea. And, until something great comes along, we're not going to waste our money on anything like that.
We're going to be having a conversation about cash balances of private non-financial corporate sector in a short while from now, Graham. But, looking at your statement, you've said that the company continues to generate strong cash flow. Looking at your balance sheet right now, where are you putting some of that cash to work? What kind of capex are we looking at moving forward?
Well, everyone's been talking about how you're going to pay for this capital in Wafi Golpu and where you're going to get this cash from. We're building up cash in our bank account, and we're in a net cash situation. Very few of the companies, gold companies around the world, are in that sort of position. So we've changed the dynamics of the whole company. And we need to build up a bit of cash. We've still got the cash coming in from the Evander transaction. That'll probably reduce some of our debt, and so we'll have more cash in the bank. But we have got significant capital to spend in Papua New Guinea. We continue to spend some capital here in South Africa, but we're certainly going to keep a lot of our powder dry for that big capital that's coming up in 3 or 4 years' time.